So, since Bitcoin dropping 55%, there's been a lot of FUD and bad news surrounding the digital currency. We had the Elon Musk fiasco, China banning of Bitcoin mining, and the constant Tether situation coming around like clockwork. Investors such as myself are in desperate need of some hopium. In today's video, I thought it would be fun to look at the most optimistic Bitcoin news and see what the top analysts are predicting for their price at the end of 2021 after all the dust has settled. First, we will look at Willy Woo, perhaps the leading on-chain Bitcoin analyst, give his prediction, and finally Max Keiser, who was the analyst that was the most accurate at predicting the end-of-year Bitcoin price in 2020. Now keep in mind, take anyone's price prediction with a generous serving of salt, as at the end of the day, it is all just speculation. But I did think it would be interesting to see what the top analysts in the space had to say. Also, only a small percentage of my viewers are actually subscribed. If you enjoy finance content, consider subscribing. It's free and you can always change your mind.
Yeah, right now the big story is like, when does this accumulation band pop? It sounds almost funny, if you talk to people on crypto Twitter, because everyone's so bearish, saying we're in a bear market, and I'm like, this is a bull market. There's no mistaking this. Like, we've got X-ray vision on what the investors are doing, and it's bullish whilst price is sliding downwards. And I think the next major event is when the fundamentals squeeze the price action, and we break out of this, what I'd call a reaccumulation band, right in the middle of a bull market, like a bearish shock that is now being shrugged off. So that's the next thing I'm looking for. And then typically, once, we usually get a few pullbacks within a bull run. This is a really weird one, a whale powered pullback. But after that, I'm really interested in seeing how the tail end of this bull market develops, because this bull market is, it's structured unlike any I've seen before. And the market of, the whole market is completely different. We've got very well developed futures and derivatives and options. And now we've got, large ETF instruments. And we've got a lot of leverage in the system, BlockFi, these kind of loans, and a lot of hidden leverage like that. So it's getting it's become a more complex beast. And I think we've already seen the way the price is moving in this epoch, this halving epoch, 4-year cycle. It's unlike anything. It's not smooth. It's lopsided, volatility all over the place. And I'm just really interested in seeing how that structures later on. I'm not predicting, waiting for some event in the end of the year. I'm more like using on-chain as a map to try and get a grasp of what exactly is happening in the market. And I have no idea what's going to happen in fourth quarter. We've got like a nation state coming on board. What would that look like on chain? We've got Lightning Network with that nation state starting to fire up. And so there'll be a lot of activity locking into that and taking it off the chain, and trying to see if we can get some data on that. Oh yeah, so people like to cite that I have an opinion, like I make a prediction. All I'm doing is reading off the model. And I get the luxury of saying the target is a moving target because the model keeps changing, because it's basically, a moving average over the market cap is what it's based on. And it's hit every top in the history of Bitcoin, 12-year history. Not saying it'll do it this time because it's such a weird cycle, but that top model, and there's another model which frames the bottom, they give me an idea of where the top may be. And first quarter of this year, we were ranging up to the $300,000 to $400,000 range. Right now, the top model is $157,000 today. Of course, it moves. And so really it's looking, I don't know, if we squeeze out of this accumulation band like I'm expecting, I would say that we'll start curving upwards and we're in the $250,000 to $350,000 range. Sounds a bit ludicrous right now, but that's what the model says. If we hit it, if we hit it. Don't know if it will.
So there's Willy Woo with his top cap prediction model predicting a $220,000 Bitcoin at the top of this cycle. As he said, the bull run is not over. Now here's Max Keiser, whose prediction seems eerily similar to Willy Woo's. But before that, a quick thank you to today's video sponsor, YDragon. YDragon is a new DeFi project launching on the BSC pad. Essentially, what the project is aiming to do is to make it much easier for crypto investors to diversify their portfolio and reduce risk exposure. It's an exciting new project that offers cross-chain indexes that generate yield and is governed by a governance token, YDR. This allows the community to have their say on the future composition of indexes and other strategic decisions. If you've been in the crypto space for a while, you know how tiresome, difficult, and time-consuming it can be to not only build, but then monitor a diversified portfolio. YDragon simplifies this entire process. In a nutshell, the project is essentially an ETF of a basket of various cryptocurrencies. Index funds give you exposure to a much wider range of projects, but are more de-risked as you own a basket of them at the same time. Just as ETFs are hugely popular in traditional stock markets, index funds of cryptocurrencies are inevitably the next step in crypto. Here you can see the benefits of YDragon over individual investment in each project. You can get reduced costs, it's time saving, easy to use, and you can diversify your risk. A main feature is that the YDragon index is cross-chain, meaning you can invest in indexes from all various blockchains. An additional positive is the yield generation. If you lock your funds into an index, you will be entitled to passive income through smart revenue generation. Here you can see the YDragon indexes they will host, starting with BSCX. BSCX is a basket of blue chip Binance Smart Chain projects, giving you exposure to BNB, PancakeSwap, Bakery Swap, AutoFarm, and BuyFi. Perhaps what I am most excited about is the PolyX index, a basket of the top 5 projects on the Polygon chain, and then AVAX, which is 5 emerging projects on AVAX as well as .x. Initially, the project will launch with BSCX, and as it grows, add more and more indexes. Because it is cross-chain, this means you will be able to hold ETFs that will give you exposure across multiple blockchains. Pretty cool. For some of the tokenomics, you can see there is a total supply of 500 million tokens and the breakdown of holders at launch. The project is going live at the beginning of August, and they have partnered up with Polygon, a blue chip cryptocurrency, and they have a range of other partnerships on the way. Definitely keep an eye on this one. As for the team, you can see an experienced group from a wide range of time in the traditional finance world and with a lot of time in IT as well. We can see a lot of experience in blockchain, coding, project management, IT, and marketing. For more information on this project, check out the link in the description. I'll include some more information. Keep in mind there's always more risk with smaller projects, so always do your own research. A big thank you for YDragon for sponsoring this video, but for now, back to the video.
Saying, we've been doing this for 10 years. We've had 15 of these corrections over the past 12 years. And this current one is an average one, nothing special. Number 2, it always shakes out the weak hands. So like a Jim Cramer that you mentioned has lettuce hands or weak hands. He never did the research. He never talked about the technology. He was in and out. He's a trader. He's a hedge fund guy. He's not a serious money manager by any respect. Meanwhile, Paul Tudor Jones came out and said, I'm upping my allocation from 1% to 5%. Paul Tudor Jones is a very successful, multi-decade successful career hedge fund money manager titan. Jim Cramer is an entertainer on CNBC who, if you look at all his buys and sells over 15 years, you'd come out exactly dead even. He's never made anyone a nickel. So that's a big difference there. Number 2, the hodling a security is always difficult. I remember when I was buying Apple stock in the late 90s when it had crashed and Steve Jobs just came back into the company. People were dead set against Apple. They hated Apple. Turned out to be a good investment. When was a good time to sell Amazon stock? Never. Even though it's went through some 60, 70% corrections throughout its ascent now to being one of the most valuable companies in the world, right? So volatility in Bitcoin is something we want because it's a trade-off we accept. Because holding fiat money means you have stability, but you're guaranteed to lose purchasing power. Holding Bitcoin is volatile, but you're guaranteed to increase purchasing power. Guaranteed. A word you rarely see in the investment world. And I was a fiduciary and a money manager and a stockbroker on Wall Street for many, many years. Very rare, never do use a word guaranteed, but I can, in this sense, tell you, you have a guaranteed rise in purchasing power with Bitcoin, and you do accept some volatility for that. But at a 200% annualized rate of return for 10 years, I'm willing to accept a little volatility. So remember, that's been compounding at 200% a year for 10 years. I still have a $220,000 target for Bitcoin in 2021. Well, that's still my target in 2021.